Between March 2nd and March 25th, the President of the United States bought between $217,000 and $530,000 worth of Micron Technology stock. The next day, he called into Fox News and said this, quote, "I just met with the head of Micron, one of the hottest companies," unquote. 2 months later, Micron became a trillion-dollar company. This is that tape. Micron Technology is the third largest memory chip maker on Earth, behind Samsung, behind SK Hynix. For most of its 46-year history, that ranking was a liability. Memory is cyclical. Brutal boom-bust swings, DRAM prices collapse, the stock drops 60%. Analysts write the same note they wrote 3 years before. Rinse, repeat. But something broke the cycle. In fiscal 2025, Micron posted $37.4 billion in annual revenue. That was up 49% from the year before. Then, fiscal Q2 2026 landed. A single quarter, $23.9 billion. That beat Wall Street's estimate by $3.7 billion. Gross margins hit 67%. EPS came in at $12.07 versus the street's $9.33. Those are not memory cycle numbers. Those are NVIDIA numbers. The reason has 3 letters: HBM, high bandwidth memory. These are custom DRAM stacks, 8 or 12 dies bonded with through silicon vias and mounted directly onto NVIDIA's AI accelerators. Without HBM, an H100 is a space heater. With it, the chip can move data fast enough to train models that cost $100 million. Standard server DRAM sells for $3 to $5 per gigabyte. HBM3E commands north of $20 per gigabyte. That is a 4 to 6x premium on the same raw silicon, and the supply cannot scale. Building HBM requires micron-level bonding precision. Yield rates are punishing. Samsung has had well-documented yield problems. SK Hynix is capacity-constrained. Micron is the swing supplier. CEO Sanjay Mehrotra put it plainly in a Bloomberg interview from Micron's Manassas, Virginia plant. He said Micron can only fulfill 50 to about 2/3 of what their key customers are asking for. And this is not a blip. He called it a structural shortage, one that extends well beyond 2026. New industry supply does not arrive in meaningful volume until 2028. In fiscal 2025, Micron's HBM and high-performance server DRAM revenue hit $10 billion, up more than 5-fold from the prior year. HBM production is sold out through the end of calendar 2026. Every hyperscaler on Earth, Microsoft, Google, Amazon, Meta, is in line for allocation. Now, here is where the tape gets political. On March 25th, Trump purchased his 4th tranche of Micron stock. The next morning, March 26th, he appeared on Fox News and named Micron by name. The stock moved. Then, on May 22nd, at a rally in Suffern, New York, minutes before that line hit the air, a wave of massive block trades in deep, out-of-the-money Micron call options hit the tape. Strike prices as high as $1,400. Single trade premiums exceeding $1 million each. Whether this is a president who genuinely believes in American semiconductor manufacturing or something else is a question the market is choosing not to ask. What the market is doing is buying. 3 days after Trump's rally endorsement, Mehrotra went back on television. He has been making the same point in every appearance since March. Memory is not a commodity anymore. Quote, "Memory is a strategic asset for AI. Without memory, you don't really have that intelligence that is critically important." Unquote. And he is backing it up. Micron announced $200 billion in capital investment across 3 U.S. facilities: Manassas, Boise, and Syracuse. The target, 40% of Micron's total production on American soil by 2036, up from 10% today. 90,000 new jobs. This is a CEO who sees a once-in-a-generation demand cycle and is building capacity into it while his competitors are supply-constrained. And then, today happened. UBS analyst Timothy Arcuri tripled his price target on Micron from $535 to $1,625 a share. The most bullish call on Wall Street. His note reframed Micron as, quote, an AI-native infrastructure giant, with what he called NVIDIA-like earnings visibility through 2029. UBS modeled earnings per share of $155 in 2027, $167 in 2028, and over $400 billion in cumulative free cash flow through the period. The stock surged 19%. Micron crossed $1 trillion in market value for the first time in its history. $876 a share, up 178% since January. The bear case is real. At $876, Micron is priced for a world where AI demand never slows down. If it does, this is 2018 all over again. But the bull case is structural. Memory has never had a demand driver like AI. And the CEO says the shortage lasts years. The president is buying the stock. And as of today, Wall Street's most aggressive analyst says the stock is still 46% undervalued. Micron is not a bet on one earnings print. It is a bet that the world needs more memory than it has ever needed before, and that the market is only just starting to price that in.